Hello, very warm welcome. You're watching a fresh edition of Your Trades on ET Now. This is Priyanka Uppal along with me, Snehi Shah. Next 20 minutes, we get you the top headlines of the day, top stories of the day, and we set you up for the next day also. But then clearly, market was in a narrow range today, Snehi, as if like we've been digesting the gains that we have seen in last few days. Nifty traded in a narrow range today, though the global cues were positive enough, and banks opened at the highest point of the day but slipped in from there and closed around about 350 odd points down. Private banks, public banks, they all were trading in pressure today. Gainers were clearly from the real estate space, energy, IT, to some extent auto, but the clear losers for the day were banks, private and public banks, and some finance names also. Cool-off was seen in selective metal counters. Hindalco, of course, after 2-3 days of movement, we did see some profit booking today. BHEL posed the numbers. Numbers were missed on almost all front, though we had a couple of brokerage notes also, but then that was a mixed bag. 5% down, BHEL trading in the day. It traded in the day today. Industrial metal price has been surging on LME. The clear beneficiary was stocks which are in copper and silver, especially stocks, and of course to some extent zinc stocks. Hindustan Zinc again, second consecutive day of gains we saw. Consumptions, we did see some of the names doing pretty well during the day. RBI mentioned in its monthly bulletin also that rural spending has picked up, and since we saw FMCG pack, the entire FMCG pack did well today, and especially the consumption names, the rural side of names like Imami and from the broader market, they did quite well. From the broader market also, mid cap was little soft, it closed almost flat, but small cap was up 0.5%, nearly 0.5%. Overall, we did saw it looked as if it was little profit booking, some gains which were being digested in since we've been running, and now we're not very far from all-time high also. And let's understand this also that we already done with 5 phases of voting also.
Absolutely. So 5 phases of voting in, and this is what the market is looking like. Not all that bad, but not all that good either. And we're just shy of the 22,600 because we've closed just 2 or 3 points below that on the Nifty today. And like Priyanka mentioned, Realty, FMCG top gainers of the day. Lodha was a stock to watch out for macro tech developers. That was up 5.6%, reached a new lifetime high today as well. Oberoi Realty, Phoenix, Soba, Godrej Properties and Prestige from Realty. From FMCG, you had Dabur, Hindustan Unilever, Tata Consumer, Marico. Lots of good names abuzz in today's trading session. Another sector where another group of earnings where we were focusing today was the group of stocks on the back of their earnings, because BHEL, that stock was down and out in today's trading session, down 5%. Net profit has fallen 25% on year-on-year basis. On the flip side, you had 8G Infra, PNC Infra. Both of those stocks did stellarly in today's trading session, up almost 10 and 11% each on the back of order wins. That was that. Gulf Oil Lubricants was up 11.5% on the back of earnings. PAT was up 37% year-on-year. GSFC on the flip side, however, down 8%. PAT has fallen almost 80% on a sequential basis, so big drop coming over there as well. Maha Seamless was down 5%. JK Tyre down 4.3%. Paytm on the flip side was a good stock to watch out for today because that stock did see some quick recovery. That was up 5% on the back of some positive management guidance. There you have it, Paytm on your screen. That stock was up on the back of some positive management guidance wherein they've said that they expect revenue of 1,500 to 1,600 odd crores in FY25. So good set of stocks to watch out for on the back of earnings. But talking about earnings, tomorrow then we have a Nifty major ITC that's going to be coming out with its numbers today. Belongs to the FMCG pack. FMCG was the second top gainer of the day today. Let's see how these numbers pan out tomorrow for the Indian markets as well as for the FMCG sector. But to understand more about the trade setup today, let's welcome on board our technical guest for the day today, and that is Ruchit Jain, the lead research at 5paisa.com. Ruchit, hi, thanks so much once again for taking the time out and joining us on the show and speaking with us. Help us understand the outlook going forward. Like we mentioned earlier on the show, 5 rounds of election are done, and the major overhang that I think the market was worried about now seems to be in the past, but still we're seeing some choppiness. Nonetheless, the volatility that we did see coming last week, that seems to be behind us. So what's your view going ahead? Do you believe that the remaining rounds of elections are going to bring back the volatility that we were seeing, or do you believe that the markets are stable going ahead?
Yeah, hi, very good afternoon. Well, it seems that the markets have factored in that volatility quite nicely, because we have seen that in spite of the India VIX rising towards over 20 kind of range, the overall trend has been quite positive for the markets, and dips towards that 22,000, 21,800, which we recently witnessed. So good buying interest over there. So I think markets have stabilized. The momentum is quite positive, and we are poised to hit new all-time highs quite soon. One can even look at the broader market momentum, where the stock specific move is quite good. One of the sector every day is witnessing a good outperformance. Yesterday it was the PSU and the metal space. Today we have seen some defensive stocks giving a good momentum. Even some of the pharma names, FMCG, have witnessed a good pullback. So sector rotations are happening quite nicely. So today, although the relative underperformance was there in the banking space, but it was not a broad market sell-off. So this remains a positive structure, and I think that's why, in case if we get any kind of intraday dips or short-term dips, those should be used as a buying opportunity. 22,500 followed by 22,400 would be seen as immediate supports in next 2 or 3 trading sessions, in case if we get any decline in the Nifty. Whereas I think our market is poised to hit new highs quite soon, maybe at the end of this week itself.
Okay, nearly 260 odd points. We are away from all-time high, but then you're saying that you would be a buyer at the dips here. So what would you buy here, Ruchit?
So it's more of a stock specific market also, as I said, and a couple of names which are looking quite good. One is Asian Paints. A good underperformance or a corrective phase, I think, is behind us in the stock. After a long period of time, the price up moves have witnessed good volumes. The RSI technically is indicating a positive divergence at recent lows. So I think the worst seems to be over for this stock. So one can look to go long on Asian Paints over here, with stop loss below 28.30 for potential targets around 3,000. And Cipla is another, would be my second call, where we would look to go long on. So ideally, during results, we have witnessed a good amount of volatility in Cipla during last week. But the stock has finally given a breakout above its swing high resistance, and that too supported by good volume. So I think this is one stock where momentum could continue to be positive. What we have seen today, with stock below 14.30, one can even look to take fresh longs for potential targets of 1,550.
Right, long calls coming in on Asian Paints and Cipla. Thanks so much, Ruchit, for joining us today. Thanks a lot. With that, we'll let you go. But let's keep it going with the technicals, and let's go across to my colleague Shrishti, who's here with the stock picks on the day on the technical charts. Shrishti, what are you spotting for us?
So we have spotted 2 breakouts today, and first of all, let's have a look at HUL, because the FMCG pack was clearly buzzing today, and after a while that we are seeing all these FMCG majors, be it ITC, HUL, Britannia, Nestle, they were on to be buzzing, and from that pack we have picked up HUL because it was a very interesting setup, because just some days back you will see that green candle, then the stock went into a consolidation phase, but for today, exactly taking a bounce from its 20-day moving average, breaking the resistance of a falling trend line, and this move was also supported by a long build up, and hence we are spotting this as a breakout candidate. So this is the first stock that we wish to highlight for our viewers. But the second stock is actually a stock we don't discuss quite regularly, but this is GMR Airports Infra on the charts, because this stock was quite interesting. Why so? Because the stock has made multiple attempts to actually cross the levels of 85 to 86 and 87 sort of a resistance band, but every time it actually managed to fail. But for today, the stock did take a bounce from its 20-day moving average, ended the day at the highest point, telling you that the strength was actually in the buyer's hand. Other than that, the stock actually finally managed to break above those resistance. For the past so many days, it has been trying and making an attempt, but it was unsuccessful. But for today, the success has been spotted as a breakout. So these are the 2 stocks that we wish to highlight on the breakout side. Back to you guys.
Alright, thanks very much, Srishti. Looks bulls have taken the charge of GMR, which had slid from last 4-5 trading days. And of course, FMCG, the RBI bulletin has actually cheered the stocks in the entire FMCG space. Let's go ahead and let's get you a word from the wise. Ashish Gupta, CIO, Axis Mutual Fund, believes that we need to look at the banking sector holistically, as it's still quite well positioned. Let's listen to him what exactly he said.
I still think banks have a good investment potential, given that even though profitability will moderate, it will still be very, very healthy. Most banks will still deliver more than 15% ROE, right? The other factor we have to kind of think about banks is the fact that over the past decade, only pockets of, within the banking system were performing well. both in terms of profitability and growth. And therefore, what you were seeing that there was large disparity in valuation between one set of banks versus most of the other banks. And I think as the performance has equalized, if you look at most public sector banks, they are also now delivering more than 1% return on assets, return on equity. For some of the largest public sector banks is even higher than private banks. So you have had both growth and profitability equalizing across the spectrum.
All right, that's the word coming in from Ashish Gupta on the entire banking space. But with that, we'll slip into a short breather on this edition of Your Trades. We'll be right back with more about today's trading session, so you stay tuned.
Welcome back. You're watching Your Trades, and now more on the derivative side. We did see a short built-up trend on Bank Nifty because they opened at the highest point of the day and started slipping in since the day, and then closed near about 350 odd points down. But long built-up trend was there on Nifty, but then there was some sort of pressure on the higher levels, higher strikes like 22,700, 22,800. Maximum of the call writing was seen on these strikes only, and hence they become the resistance also. But then the support has also risen up now, 22,400 and even 22,500. These two strikes happen to be the crucial support for the index because there's a maximum put writing which is seen on these levels also, Snehi. So this was more of the derivative action, but a lot of individual stocks from the F&O space which have done exceptionally well today.
All right, let's keep it going with individual stocks, and then let's talk about this big story of the day, and that happens to be two stocks that we want to highlight for our viewers today on the show, and that is BHEL, which was down more than 5%, and BEL on the flip side, that was up more than 3.5%. There you have it. Now, brokerages have shared a mixed report after BHEL delivered a lackluster show in Q4, and BEL on the other hand came out with a robust guidance for the current fiscal. My colleague Jinay is standing by with the comprehensive comparison between these two names. Take it away, Jinay.
Results were on the owing to flat execution and working capital, making the company net debt company. The miss on EBITDA was due to the higher risk, which was not for the support of provision write-backs. For FY 2024, the margins fell around 60 BPS. The management said that this should be bottoming out from now on. And if we talk about the cash flows, analysts say that this reflects the real situation in here. 3,900 crores of negative free cash flow has led the company for a net position of around 2,600 crores. The future of the company's net thermal business looks bleak beyond FY30. The analyst says that the old legacy project shows sign of execution pickup and is expected to perform better by the end of FY 2025. Now moving on to BEL, the company reported the revenue of around, the company is trying to target a revenue growth of around 15% for FY 2025. The management also said that the EBITDA margins for FY 25 will be in the range of around 23 to 25%. The focus for FY 2025 is in improving operating efficiency going ahead. They're expecting the total order book of around 25,000 crores in FY 2025, excluding the QRSAM order book. For export revenues, they are targeting $110 million for FY 2025, with adding another $200 million from export markets. Now, if we talk about the capex and expansion plans, they will be doing around 600 to 700 crores expansion per year. And they are also building a super component facility in Hyderabad, starting up with an investment of around 130 crores.
All right. Thanks very much, Jinay, for highlighting all that, what was crucial, which came crucial from the con call highlights of BEL. But then BHEL con call, some intercepts came in from there also. Sadashiv Murthy, CMD of BHEL, spoke about FY24's performance, and he also gave guidance for the years ahead. Let's listen to him, what exactly he had to say.
Received orders of 9.6 gigawatt last year from our power sector division, totaling to around 52,000 crore rupees. All these thermal sets are of 800 megawatt rating. Our industry sector segment also witnessed the highest ever order book inflow of 22,000 crore rupees. With the above, we recorded BHEL's highest ever order book of around 78,000 crore rupees in FY 23-24. If we see the previous year, it is 70-30 ratio, 65% or 65-70% is from power sector and balance is from industry sector. And our perspective is we want to go for 50-50%, 50% from the power sector, 50% from the industry sector. And from industry sector, as our main areas will be transmission, transportation, defense. These will be the three major areas. As far as capacity addition is concerned, around 10 gigawatt capacity addition we will be doing. And exactly means we cannot say what will be the revenue guidance, but definitely we are targeting some 12 to 15% of CAGR year on year.
Word coming in from the management at BHEL, but let's keep it going with all the stocks that were abuzz in today's trading session. We did speak about a whole host of stocks, but we also have my colleague Gaurav who's standing by with a list of yet another bunch of stocks that were buzzing on the back of either their news flow or on their quarter four numbers. Gaurav, take it away.
Well, yes. First, let's talk about Tollbros Automotive, because if you look at the numbers, revenue increased almost by 16% on a YY basis. If you look at EBITDA margins, those also shown an improvement of almost 89 basis points, and net profit increased almost threefolds. Now it stands somewhere around 50 crore rupees. And on the back of this, we saw this stock was turning in green today. Next, let's talk about Kaveri Seeds, because if you look at the revenue, it increased almost by 33.5%. Company actually reported net loss of 40 lakh rupees only, which actually narrowed if we look at the previous year's same quarter, where the company reported losses of 16 crore rupees. And on the back of this, we saw a positive momentum coming up in this stock as well. If we talk about Strides Pharma, we saw increase of almost 10% in terms of revenue. Net profit actually reported at 18.1 crore rupees, whereas company had reported losses of 9.5 crore rupees in the same quarter last year. And if we talk about EBITDA margins, there also we saw some kind of improvement of around 500 basis points. And on the back of this, we saw a positive momentum coming up in this stock as well. TeamLease was another candidate where we saw a revenue increase of 20%. Net profit was up almost by 15.5%. And if we talk about EBITDA margin, that actually declined almost by 15 basis points. But overall, the reaction was positive when it comes to numbers. And lastly, let's talk about TCS, because TCS has recently bagged an order from Bergen Bank, which is Kuwait's youngest bank, for transformation journey of the bank. So TCS is going to help create the bank modern core banking solutions, and on the back of this we will definitely watch out for TCS as well. So on back of numbers as well as on the back of the news, we will watch out for all these stocks in tomorrow's trade as well.
Clutch of stocks which were buzzing because of the numbers, and of course some other news. Thanks Gaurav very much for all those stocks. Moving ahead, let's go further and talk about the earnings, and post the earnings, the management reactions. Manish Gangwal, CFO Gulf Oil Lubricants for India, he expects 14 to 16% of margins going ahead. In fact, he also added that the company is eyeing double-digit revenue target also. Let's listen to him.
So usually we aim to have 2x or 3x the industry growth rate. We know that the lubricant industry is growing at 2 to 3% on a full year basis because the new better products are coming, higher drainage interval lubricants are coming in the market. And in fact, we are one of the pioneers in terms of these long drain products in India. But having said that, 2 to 3% industry growth, and we usually aim 2 to 3x. So obviously, we are looking at continuing our double-digit revenue growth targets, close to double-digit.
Right, double-digit revenue target, it's what's on the radar of Gulf Oil. But let's move on and talk about the big Nifty earnings that the street is going to be seeing tomorrow, and that is ITC, all set to report its quarter four numbers. Let's go across to Winnie to get a lowdown on what the street is penciling in. Will the FMCG business see high single-digit growth in quarter four, Winnie?
So we should be watching out for the cigarette volume growth. That's expected to be flattish at around 1% is what you could expect. And overall, in terms of the revenue growth, that would be at around 3.9%. Yes, do not forget there may be some pricing growth that will come in this time, but that is going to be key to watch out for. Other than that, we are watching out for in terms of the profits, expected to see a muted growth of around 1%. Overall, what the street is expecting right now, what we are penciling in is a muted show that could come in, because of paper and agri business that is expected to continue to be under pressure. That's what is happening in the last couple of quarters, and that could maybe be the case even this time around. FMCG business, on the other hand, we are expecting FMCG business to see a high single-digit growth in terms of overall the growth over there. While in terms of the EBIT margin, let's watch out for the FMCG EBIT margin, where that is headed. Maybe Year-on-year basis, we could see the FMCG EBIT see a bit of a decline, but that's something we are watching out for. Other than that, hotels business expected to see a strong growth that's sustained, given that travel tourism is picking up pace, and hotels business for them has been doing quite well in terms of the strong growth that we've seen in the last year. Cigarette volume mix over there, new growth vectors for FMCG, as well as the outlook for the paper and agri business are the key factors that we're keeping an eye out on.
All right, thanks very much, Vinny, for that quick update. Well, that's all in this edition of Your Trades, but more cues to come from the global front because we have Fed minutes to be released today, that is on Wednesday. And of course, Nvidia's number, which has already rallied about more than 90% this year. So these two Q factors to be watched out on macro front. We see you tomorrow morning. Till then, stay healthy. Thanks so much for watching.